This is Tom Winterstein. We are at top of the hour. Welcome to everybody that's here. You may have noticed by default when you join in, your camera is turned off. We're not going to need to see each other today. What's important to see is on the screen, and what's important to hear is the interaction between ourselves. And also by default, your microphone is turned off. That's just because lots of times we get a lot of background noise and echoes and stuff like that. But at any time, if you have questions or anything, you can go ahead and unmute yourself, or if we're looking for some interaction, that's fine too. But we'll just kind of do a sound check right now. If you guys want to unmute yourselves, make sure I can hear you, make sure you can hear me, and we'll get going. Okay, can anybody hear me? Okay, I'm getting some feedback in the chat that you guys can hear me, so that's good to know. I'll keep the chat down and out of the way. Well, welcome to everybody to our webinar for tonight, and what an interesting time and unique environment to be trading. Certainly is almost unprecedented. It is as far as the point moves in a day, but not as far as percentage moves. And we'll talk a little bit more about that as we go through our session tonight. A couple of things, housekeeping. One, just to kind of let everybody know, we do have brand new students in here, and welcome to those that are brand new. And we also have students that have completed the Forex Mastery course, so welcome back. And I want to be real respectful and sensitive to not jump ahead in the content, so to speak. So for our session today, we're going to be looking at a couple of different charts. We'll be looking at different time frames. We'll talk about a concept that's not necessarily in the materials that you may have heard of, maybe not. But it's called market segmentation, and it's very similar to creating support and resistance, although we're going to see how we can do that on different time frames. And we'll begin to talk about a very important tool as a trader. If you don't have a very formal chart library, well, I'm going to strongly encourage that you begin today in keeping one. And I'll be sending out a template that you can use, or you're welcome to create your own template. But essentially, for every pair that you trade, and for this course, we'll be charting maybe some pairs or some instruments that you don't necessarily trade, and that's fine, because as much practice as you can get on these charts, the better. And when we go through, if you can think about essentially all of the items that are traded on Nadex are the items that we'll begin to start storing in our chart library. And we'll do that for a couple of reasons. One, those are the major instruments that are traded worldwide. They're available on Nadex. They're available on spot Forex. They're available on traditional futures. And sure, there's some different charts that people like to follow. I personally don't follow natural gas that much, but I know people who do. I know people that make a living trading natural gas, and they fondly refer to it as natty. So let's get into the topics for tonight. If you can see my screen, I've got to move some of these presenter tools around. I'm sitting on the monthly time frame, and you can tell that here, and I'm looking at the time interval of maximum available. And if you're not starting any chart analysis and chart review at this level of maximum available and monthly view, I'm going to encourage you that you do, and you'll see why as we continue to move through our session and we move down to lower time frames, if you will. So I'm going to just go ahead and mark off some basic support and resistance, and I kind of have a method that I'm going to use. It's support and resistance along with segmentation. And so I'm going to get a line tool, and I'm just going to start from left to right, and I want to mark off any of the obvious levels that I see. And so since this is the lowest one that shows up on my screen, I'll start here. And because I'm on a monthly view, I like to color code my time frames. And this is certainly, it's a personal preference. You can use any colors that you want. But I know anytime I'm looking at one of my charts and I see, one of these kind of thicker oriented yellow lines, I know right off the bat for me in my legend of colors and lines and stuff, that's a monthly support and resistance. And we see this one's up here. And some of these are kind of easy. There's really not a whole lot in between here. We get a lot of chop, and we do see something right here, but I'm not going to mark that off as a monthly segment. I will mark it off, but I'm going to mark it off, and I'm going to call this a monthly pivot, if you will, because this is one of the few subjective areas when you're marking these off, because it will essentially adapt to your trading style. So if you are a swing trader, if you're a day trader, if you're a Nadex binary trader, it doesn't really matter. Your eye is going to see the chart a little bit different than someone that doesn't trade your style, so to speak. And so this is what I'm going for me is a monthly pivot, because it's between these two segments of a month, but it had a lot of other stuff around it. But that's an important level that I want to know going forward. And so we'll see over here, again, working from left to right. A yellow dash line for me is a monthly pivot. And then I see this right here. And I don't really want to mark this one off yet because I don't know where it's going to end. But this one was of importance to me, anyways, to my eye, because it was the last retest of this level before price kind of shot up here. So as the lines begin to get a little closer, I see something in here, but for me, that's not enough to have a monthly segment. That's not a fast turn. It's not, the last time that it visited that area in months, weeks or years, something like that. So for now, I'm just going to leave it the way it is, but I'm certain it will present itself in lower time frames when we get down to like the weekly, daily 4-hour, of course. And that level will probably play some of importance to us going down the road. Now, for right now, I really don't see anything else. Maybe this right here is a pivot. This isn't really a pivot for me, but there's going to be some stuff in the lower time frames here. And so one of the reasons we want to do this, and as a trader, we want to know what's immediate, what's coming up, what's tradable for us. And so as we mark off these segments, and because this was all-time high, we really don't have a segment above. But as a trader, we're going to be looking and working in our current segment, and we'll mark off one segment below and one segment above. And that's really our area of interest if we're going to be trading intraday, if we're going to be trading maybe a weekly, if we're going to be trading, for swing, and maybe we're going to hold it, we plan to hold it for a very long time till it reaches our targets, then that's a little bit different. So if anybody sees any other levels you think we should mark off, go ahead and unmute yourself and just kind of shout out a price level. If you think it looks good, you can unmute yourself and let me know that it looks good too. But so I'll pause for just a moment till I hear at least one person let me know. Come on, someone's got to unmute themselves, or else I'll unmute you and I'll call on you.
Tom, this is Vijay here. I do have a question, on the price point around the 19 on the x-axis and 69.41 on the 69.41.25 price.
Yeah, around in here?
Sorry, go back to 18.
Yeah, okay, I have some presenter tools in my way, so let me move those.
Yeah.
They're covering my screen. Okay, so 18, somewhere in here?
Yeah, you see that red candle, the bearish candle?
Yes, this one?
There is a spike in there, right? There's a sharp move and the price shot down.
Yes.
So is that because that move looks like a sharp move? Is that a valid one? Maybe on the weekly and a daily time frame it may be relevant, but it's a sharp move.
No, you're absolutely right, and that's a pretty good high to see that. And one of the things that will happen is, let me zoom into it just a little bit. Make sure I didn't go too far on this. So we're talking about right here. If you notice what happened, it did go up above it, but the body closed below here. And there's a concept that's called the recency bias. And this was probably the only segment or the only pivot point in here that I didn't mark from left to right. And what I mean by that, as I was looking through here, I went ahead and actually marked it from here because that's the most recent time. And if your eye picked it up that, hey, that level has some significance historically. And when it came, it had some chop. It was up, it was down, it was up, it was down, and then it broke through. But the last time that it came through here, and the next time, but the last time, that's where it stopped. And so for me, that's more of a recency bias. And so that's why I put it in there. But to your point, there's a couple of different right ways to do this. Some people like to put it right at the wick like this, and that's perfectly fine. And you see it catches it over here. Some people like to come in and say, you know what, I'm going to do it right at the body. And so this was the highest body. Even though the other ones have wicks above it, the body closed at this level and everything else closed below it too. And you see going forward, the recency bias still kind of picks it up. And so that's really, your eye will see different things based on your trading style. Like somebody that trades, exclusively binaries, and I know some of you do, this level would have been important here. Let's say anything from here over hasn't happened yet. And we came up here and price fell. We came up here, price fell. Now keep in mind, this is a monthly. Okay, so we could come up here and know that this level might hold for us, but it might not. But if we saw price come up to here, and at this point, it's all-time highs, it's kind of hard, but with all this price action, this is where people that trade binaries will think out of the money, because this level is held 1 month, this level is held the second month. And so if price is up here, they might say, okay, you know what? I might be able to get a binary and sell it for like 82 to 85. And, that's a pretty low risk with a high reward type possibility. And if price closes, if I get that movement back down below this monthly pivot, well, I'm going to be able to profit. Now, that's a totally different strategy than if you're a swing trader. If you're a swing trader, you're probably not taking anything around here because it's all-time highs, unless you had some, there's no levels up here that would have validated a short right here. And keep in mind, we're just looking at basic structure right now. Maybe there was a trend somewhere, but for me, that wouldn't have been enough to take a trade, in a traditional futures for a swing trade. Binary, possibly. Don't know. So does that answer your question, Vijay?
Absolutely. Thank you so much. That's a lot of clarity, because the only reason I asked that question is that sharp move kind of showed 50% of the body down, gave me a feeler that there's a bearish move and the investors are not ready to pay price beyond that. And they thought that that's a profit taking zone. And the next candle became a doji. The candle before that was a huge bullish pin bar. So I really thought that, the price is going to shut down and come down, but then it just took off. It crossed that support resistance level, and then and a huge bullish move came and did a retracement and just took off.
Right. No, you're absolutely right. And you're talking about specific candle patterns, and that's good because we want to be able to identify price action. But for me, and I'll be honest with you, what's more important to me are the levels. The levels are always more important to me than what the candle, look, sure, we know, okay, here's 1, 2, 3, 4 months of bears. Okay. And so, yeah, that's important to know. And that's the market sentiment part of it. But the shape or any patterns that the candles do, I really don't pay that much attention to. Like, I've heard people talking lately about head and shoulders or inverse head and shoulders, and I don't really get into that.
Yep,
I used to think.
Totally agree. Even neither do I. I only that caught my attention because going through the course, Forex Master course, when there's a sharp move down, I kind of try to keep that as a major support resistance price level. I completely agree with you.
Yeah, no, you're right. And so one of the things that you can do, this would have been probably the better way to do it initially, but as it came down, it didn't really respect it. at all. It didn't even touch it here. It kind of came through. It kind of meandered around here, and then it took off again. So from a recency standpoint, it's okay to adjust these.
Got it. Okay.
And for me, I would probably put it, right there, since that one happened. Okay. It wouldn't be wrong to do that per se. But then you have a really small area, through here.
Which may be a valid and a significant on a daily or a 4-hour time frame, but we are looking at a monthly chart.
Exactly. So
right.
So now, thank you for that. So I'm going to zoom back out, and so I feel pretty good about where my monthly chart is. And at this point, what I would do is I'm going to go ahead, I'm going to put this monthly chart into my chart library. And if some of you I know how to do this, but I don't want to assume that everyone does. So all I've done is I've hit this little menu box up here, and I'm going to share my grid. I can add a note for myself right here. And then I'm going to open this up. If you've never done this, this is pretty cool. So we'll open up all the things that I have. You see the note, the NQ monthly. I can copy this link. It puts it into my clipboard, and then I can paste it into like an Excel spreadsheet or a table or whatever program that you like to use. And like I said, I'll be sending out a template for chart library in Excel, and there'll be different tabs for the different ways that we chart. And this is going to go in our column for NQ monthly. So if you have any questions on that before we move on, stop me and let me know. If you weren't certain on how to actually do that procedure, you'll be able to see that in the recording as well. So, but if there are any questions, immediate questions, you can certainly stop me, right now. So good, we've put that into our chart library. And so I'm ready to move forward with my time zones, but for now, I'm gonna leave these on here. And what you'll see is we'll go through an exercise where my chart's gonna get really messy. And that's okay, because then we'll go through a process to clean it up. Because if you recall, I talked about the segment we're in. So, one segment above, one segment below. And, we can, I'd like to think price isn't gonna get down to 1,000, this week or this month. And so as we get down to lower time frames, we're actually gonna remove this stuff. So our chart looks pretty clean. But let's work our way down, to a weekly time frame, and I'm still going to keep it maximum available, and I'm going to move down to the week. And we can see from a time frame standpoint, it doesn't go back quite as far, but it goes back, about 20 years, and it still gives us enough stuff to work with. And I'll go through a very similar exercise to see if different things present themselves to me now on a weekly basis as opposed to the monthly. And so I'll work from left to right, and I'm going to start marking off things that I see, and I'm going to use a different color for me personally. And again, you can use whatever color you want. I use blue, so I know on my charts that blue is a weekly. And now all these extra levels are clearly presenting themselves to us that we didn't necessarily see, clearly on the monthly. And, so we've got a bunch of levels in here. And it doesn't look like a lot of distance, but as we zoom down, if you've done any kind of charting, you know that it will. It doesn't want to snap in the right place. There it is. So now let's start looking in here, because this is some more of the recency stuff. And VJ, here's some of that chop too that looked a little clustered on the monthly. It's presenting itself, and we'll zoom in a little. You can clearly see that, here was our monthly, but it did go past it, and that was the wick that we saw on the monthly time frame.
Yep.
And this is even of interest to me too. And let's see if I see anything else. I do work from left to right, but sometimes I miss things, and so I'll go back and kind of give it another scan to see if I missed anything. And through here, it was just kind of straight. You know, you could put something there because, you know, that red candle at one point, that was all-time highs when it fell off of there, but then it shot right back up. Let's see. Does anybody see anything that I'm missing maybe? Maybe back here. This may come into play if the market really keeps going. And so it's starting to look a little cluttered, and that's okay. That's okay. Anybody see anything else? All right. I'm not going to step through the whole process, but I would go through. I would do that same thing. I could add a note to myself, open up my shared items, and now this goes into my chart library as the weekly. That sounds pretty cumbersome, but it is extremely valuable to have. I promise you, there's monthly charts I did last July that I've been pulling out numerous times in the last 2 weeks because of all this movement. So now that we've got our monthly and our weekly saved into our chart library, we're going to go on down to the daily. All right, so let me get to my daily. And now the stuff that's, you know, 15, 20 years ago, I'm not as interested in. I'm going to kind of zoom in to here. There's ways you can adjust the height as well. I want to see more of the lower. Yeah, so I've got expansion area 10% up, 30% down. I click OK, and the way I got to that is I went to settings. I hit price axis, do my expansion areas. I can also do it with the time areas. So if I like to have a little more space to the right, I can do that. And certainly you can drag it that way as well. So now let's go back to here. And I'm going to start to take off some of these things down here. I don't think we're getting 3,800 this week. I could be wrong. But I'm going to go out on a limb for this session, take some of these off. We'll leave that for now. That doesn't really look to see like there's things on top of each other or overlap. Because if you have like, if I had a monthly on top of, you know, a weekly, I would take one of those off. And I always, me personally, I always leave the higher time frame. And you see, remember, this was our monthly segment. And it looked pretty small when we were on the monthly view. Now that we're on the daily, that's pretty wide. Okay, and we have a lot of levels in between that go back the last couple of years that are probably going to be valid for us. So I want to go back to December of 18, and I'm going to look through here because this is a pretty, if you look at where we are today, that looks like it's got a lot of room to fall. So I want to see, are there levels that didn't present themselves to me on the weekly? And we got a lot of chop through here, and there's certainly some areas that I want to mark off. And for me, on a daily, I like to use gray. And again, you can use any color that you like. Anytime you change it, you want that to be your default, just save as default, click OK, and we're ready to roll. And there's several in here that we could actually mark off. And one thing that I like to personally do is, what did price do the last time it was at a level? As price is coming through here, we're going, these at the time, these were all-time highs. Price comes down, it's just kind of cycling up and down. And, you know, I didn't really have this was sort of, could have been marked off right here. But look at how price just absolutely dove off of this level from 71.30. It just straight down for several days, a couple of 100 points, or a couple of thousand points. And that was that December of 2018 where it just made that steep move. And so for me, this level is something, if price wants to retrace and come back up, that's something I want to remember, because this is where price jumped off. And you can even do things that, December went down to December 2018 low. And you can put this on there because, that might bear some importance, in the future. Might not. The other thing I like to mark off, and they're not really presenting themselves that much yet, is if there's any gaps that haven't been filled. I like to mark where a current gap is, and if it's in the same segment, I like to mark where a previous gap was, because price will behave strangely at times around those gaps. And so we see that price went down to the 2018 low once it hit this gray one. So let's see how price reacted before. It came up and it kind of bounced around that before price decided, hey, I'm going to get some separation. But then it got stuck right back to that. And it didn't stop there. And it kind of chopped back up. And we look at the price action, what did it do? It tried to come back down. So there's something about this level. And if you look what happened, this week and last week, price kind of reattracted itself right back to this level. And that specific daily support and resistance is presenting itself to us as, okay, this is an important area, because price historically a couple of times has dove down from there. It's shot up from there, but on multiple occasions, it's kind of returned to the area. It's shot down over here, return, shot up, return, shot up, and now it's returned. So there's something about this level, 3 times to me, this is an area of importance. And so some of the things that we can begin to decipher from that, what potential price actions could happen from here? Well, we might get some chop. Okay. We might get some chop. There's some chop, but at some point, whoever's in charge, the Bears or the Bulls, and particularly in the last 10 days to 2 weeks, the Bears have been in charge. But we see, the Bulls stepped in, right around this level on Friday when the market went up, when the Dow Jones went up almost 2,000 points. And we can see that NQ shot up as well. And so this is how you begin to read price action and levels. Although I don't think this is a factor, that's something on the daily that probably needs to get marked off. And so for me, it's really intriguing and fascinating. You can be very successful trading just level to level. Even without trend, without Fibonacci's, without supply and demand, without change control zones, there are people that are successful that trade with charts just like this. And sometimes, and this happened to me recently on the Aussie dollar chart, I had a really hard time figuring out the fib sequence. And I didn't have trends that worked. The change control was just real choppy. And so I basically went back to this. This was my AU chart for a while, until it presented itself to me where there were some other tools that I could use that helped me out. So on a daily, I've kind of got this big gap between here. And so if price breaks this level, does that mean it's necessarily going to go to 65.80? Not necessarily. But if we just look at what's on our screen, it might. But let's go back in time and see if there was anything that we missed or couldn't see, not necessarily missed. Now here's a level on a daily, and we just get this kind of massive cycles through this area, just a lot of chop. And see, even if you traded level to level, if you went long here, you could get off right here. You could go short here, comes back down to this level. Get long, goes up to this level. And it kind of front runs a little bit, but you kind of get the idea. And then this level kind of breaks back down before price decides, okay, the bulls are in charge, and it takes off. And we had very similar back here, just level to level type trading. And in this case, it shot up, but it came back, and then it came back all the way down, and then it went up, went down, cycled around. So with that said, some potential price action through here, price can come down. This was the level we were looking at, and it might just, shoot back up. The bulls might step in. It might chop around for right here, or it might make a beeline and run down to 65.80. And lots of times, the market sentiment will kind of give us a clue as to what could possibly happen. And really and truly, I see traders freak out and they get, the emotions kind of get the better of them. But in all honesty, at that 69.73, there's only two things that it could really do. It could either stop and turn back up, or it can break and keep going through. And that's it. We don't really have to overthink it. Now, there are some things we can do. Let's say, and again, I called out this 69.30 because it's yellow. And for me, I remember that's a monthly pivot point. And we see it's kind of bounced off of that 3 times in the last 3 days. So this level is held. And, that was something that stood out to us on the monthly basis when we're looking at, the 20-year chart, or, maximum available time. And so for me, I can make a note, has held last 3 days. Because, when you get into the heat of the trade, and the markets are moving wild, and you might not be looking at a daily, you might be looking at a 4-hour or 1 hour or 30-minute, whatever you happen to be looking at, and that's not going to stand out to you. Sure, you'll see the yellow line, but it does look kind of a little busy. But for the levels that have significance to you, go ahead and put a note over there. That's fine. It's held the last 3 days, and so that's good for us to know. Now, there's certain things about levels that I want to point out. Let's say this 9,000 level, big round number, that gets talked about lots of times. And, that happened to have been a weekly pivot point for us. And let's look what price action did around that big round number and this level. So we see price came down and it tested it, and it went up and kind of front runs our next weekly level. But then price comes back down and breaks that on that day. But the very next day, it does what's called a break and retest. So it breaks that line, retests it, shoots down. Okay, it's touching some other weekly pivot points we have. And what does it do? Over the next 3 days, it shoots right back up and retests that. So we actually had 2 break and retests, which is kind of uncommon. It's not uncommon to get a break, retest, and drop, but this one ran right back up to it and came down. And so if the bulls do step back in longer term and price comes back up over to, approaches 9,000, that'll be something to look at. What happened the last couple of times price approached this level on the way up? Well, we can see, it broke, retested, dropped, came up, tested, dropped. Okay. So the chances are next time price comes up to 9,000 that it shoots right up to 92.87. Probably not very likely. It might shoot right through there, but at least we might get a retest of it. And we see that even before that, where price kind of chopped around here, broke, retest, came up, broke, retest, and then shot up to 97.63. And that will happen not always around a big round number. In this case, and in many cases, it can be coincidental that it happens around a big round number. Not uncommon, but what is more common to see is whatever historically the way prices behaved around a particular level, that's more important to me than what the number happens to be, if that makes sense. So if we're looking at this, there's one other tool that I want us to use, and I want to go back to the monthly for it, and I'm going to see if there's any trend that can help us here. And so whenever we're doing trend, there are actually some wrong ways to do it. And I know in the lessons, Mike talks about, draw your trends through the candles and, let's just get creative, and that's fine. but you'll find more times than not, when you have them connected from wick to wick, those are going to be respected more times than the ones that you have being drawn through the candles. So let's see if there's anything that helps us here. And I'm just going to start down at the bottom. And whenever you're doing a trend, you want to start, a trend, you want to start at the low point and you want to connect the next lowest point. And so we do that, and that doesn't really work because it kind of went all over the place. So let's see if this works out as the next lowest. And it does. We see that we can establish right here, it was respected one time, another time. But since, when is this? Since November of 2013, this trend line has not been tested. Okay, it's a possibility it could get tested again, but we don't know. But let's see if there's other trends we can use that might be a little tighter. So here's a low point. And there's another one. Now for me, the way I like to draw my trends, and all I'm gonna do, I'm on a Mac, so this is a double tap or double finger tap, but on a Windows machine, it's a right click. You just right click on that. And let's say that, I want to duplicate it. I need to move it around. I can do that. If I need to, delete it, whatever happens to be. But if I want to, edit it, I can change the color. Lots of times I'll start with my default trend as red. But if a trend is less important to me, I'll just diminish the color so it doesn't stand out as much. And again, that's a personal preference and style. That's something that you guys can do, whatever your preference happens to be. Let's see if there's any other trend that might help us. And I'm going to zoom in a little bit. We take this one and go to there. I don't like that, but I really don't want to skip that one and come to here. Let's see what this might do if I grab this. I kind of like that. And you see how we've got a progression. None of these are wrong. They're all valid. We have an establishment. We have where it's respected. Now, we could anticipate as a trader, we see we've got a daily level pretty much around the trend, and we've got another one just below it. So sometimes you get a wick. So that's the monthly. Let's go back to our daily and see what that looks like. And we see if the market wants to keep coming down, for me personally, there's a level of interest at 65.80 because I've got a trend that goes back a couple of years. I've got these levels that, gosh, we've just spent the last 30 something minutes going through identifying important levels. And you'll get to a point where when I mark up a chart from scratch and I start with everything blank, I can go through all my progressions in about 5 to 8 minutes. Just because your eye will get trained. You'll get comfortable with the tool sets, the different colors. You'll know what they mean to you. And that's, just building chart time and chart experience, for yourself. Now let's go down just now. Let's say, maybe we're interested in some intraday trades. And given the volatility, you really have to be careful, so to speak, because, look how big these moves have been. So I'm not going to go below a 4 hour. Some of you may have seen a post that a trade that I posted on YM last week. I actually took it on the monthly chart. And that's okay. I know in the lessons, we can go down to 30-minute, 15-minute, 5-minute, but you kind of lose the sense of the market sentiment, or at least I do sometimes. Obviously, we've got, the market's trending down right here. I really don't see any other trends. I don't see much in the way that can come this way to help me, but let's see if that one happened to have worked. And we see that it did. And for now, I'm going to leave this, I'm just going to leave it on there, but I'm going to diminish the importance because it didn't really hold per se. It was doing okay. Like it held here, came down, held here, broke, gave us a retest, and just shot right on down. But the last time it came up, it really didn't respect it going up or going down. So to me, that has less of an importance, and I'm likely to take it off. Let's find another low point. let's see if this can help me in any way, or if it happened to work. I'm gonna take this one off just so it's out of our way. And I really don't like that one because although we established it here and I respected once, it didn't do anything on the way down. I didn't even get a break and a retest. So to me, that it's not wrong, but it's not anything that I want to keep on my chart for now. Let's take another low point. And keep in mind, when I'm building trend, I'm going to go from low point to low point. Now, this is something where it's been established. It was respected. It looks like twice in there. Really hasn't visited again. It came close, but look what it happens to do. And I promise you, I didn't do this ahead of time. That other trend that we had coming up in this daily level, it kind of intersects down through here, which strengthens again for me my level of interest around 65.80 for a potential long. And that can be a long binary, that could be a long touch bracket, that could be long traditional. Does that mean it's guaranteed to work? Absolutely not, because price can do whatever it wants because it's got these other levels down here that it liked historically. But I'm starting to stack the edges with just using support and resistance and trend right now. I've been able to find a couple of areas or sometimes it's not always a level. Sometimes it could be an area or a zone of interest. So chances are price is going to come down here. It might breach this trend line. It might respect this daily. It might want to wick down and get this one, but it might close above there. We don't know, especially with how these moves have been so big and they've got tails on the bottom, so to speak. So that's a level of interest for me. And we see that this has held the last 3 days. And so if I were to anticipate what potential price action could be here, if we do get a break of this level and price wants to come down here and visit these, the trend line or this daily price, and it happens to turn back up, where is it likely going to go to? Well, probably this monthly pivot point. And it might meander around this daily level that we had, but chances are if it breaks down here and it's going to give us a retest, well, we know where they want to take it back to retest. And we see, the last 3 times. So, that's something to keep in mind where price can, come down here, maybe up a little bit, maybe test this level. It's not always a straight direct shot. It's not always nonstop. And then it might shoot back up here because you see how big these candles can be. And right now we're looking at the 4-hour. So it's not unreasonable to get a candle, of this size to go, a bull candle that'll take it back up here. So keep that in mind as you're going through price action. So I'm going to stop and pause for just a minute, see if there's questions. I'm going to check the chat. If you have anything, you can unmute yourself. All right, Sergio, I just saw that you can only see the main window, not the pop-ups. Okay, sorry about that.
Tom, this is Vijay here.
Yes.
There's one more trend that I saw, but not on the low to low side. But if you just zoom out a little bit, I just want to see if that was intentionally left out. From the 97.63 point all the way to the first respect at 9002.
Yep, you caught me. I left that off. I want to see if someone would catch it. Good job.
Thank you. I just wasn't sure if that was intentional, and when you do a fib, obviously, yeah, there you go, another trend.
Right, and there's another trend. But right now all those are okay. I don't, something like this is correct, and we've done that for our exercises, but for the purpose, and that's to identify, that's kind of too steep for me to use. I wouldn't have gone long off of that trend, even though it was respected, like that. And so lots of times, I see people will have that, and they'll try to trade off of it, and it just gets too messy and too blurry. So let's say that I was looking for a trade tomorrow, and I think we can presume, price is not going to go up 4,000 points, nor is it going to go down 4,000 points. And so if we really want to hone in, I can begin to clean some of this up, and we have it saved in our chart library, so it's no big deal. We can quickly recreate this without having to start at the monthly. I don't think we're going to see 48. Could be wrong. If we see 4,800 tomorrow, everybody show this video and say, hey, Tom said we wouldn't see it. I know some people like to take it down to the hourly. I'm not going to mark off any support or resistance on the hourly just because we've had so much volatility. Now, I will point this out because it's very uncommon to have this. It hasn't happened in several years. But this is where the market was halted. And I made a point to someone earlier this week. I treat that like it's a gap. I want to mark it off, and I'm going to identify it. I'm going to give it a different shape just so it stands out to me. Oh, forgot to put the name on it. And I can do the same thing. I'm going to duplicate this because the market was halted there. Now let's look how price behaved around here. When price got halted, it was for several hours. Okay, and when it opened, price absolutely shot down. Didn't really know where it was going to turn. This would have been a pretty good logical guess because price went. This is where price went down from here to the December 2018 low, meaning that price went south off of there. In this case, what did price do? It ended up retreating right back to where the market was halted, almost like it behaved like it was a gap. Even though essentially there was no gap in price, there was a gap in time. Okay, so that's why I want to mark that off. That's of importance to me. And if price does revisit these levels back up here, and VJ, we've got that trend that you identified. Look what's in the area around there. That's where the market was halted. We've got weekly pivot points in here. So as price were to revisit up here, it's shy of that 9,000 level we talked about, and that's okay. But from just a basic structure, this would be, an area of interest for me.
And it is also the channel top, right? So it's a
right. We've got the channel top. We've got where the market was halted, and then we've got these two different weekly pivot points. So it might come up here. We might get a wick. We might get a breach and then come back down. But chances are, if price comes back up to 81.68, and let's call it a 4-hour daily, price is likely to close below here at least once, because that's how it's behaved. And if keep in mind we're on the hourly, let's go back to this gap in time because this is where price was halted. And when the market opened up during that hour, it came all the way down to our weekly pivot and shot straight back up to where the market was halted. Okay. Doesn't always happen that way, but it can happen that way. And then, price just kind of meandered around this, to me, that's a level of significance because price was halted there. Broke down, returned to it. Price raised there, returned to it. Broke below it, returned to it. Broke above it, returned to it. And so you see it just kind of cycled for, probably 20 hours around that level where it was halted, which is a little different around here where price got halted here and it shot straight down, came back up, and it's kind of meandered around it, but maybe not 20 hours, but maybe for the better part of a day before it took off, came straight back down to it, and then went down and came back up to it. So, the market really has a big decision to make. If you look at the channels we've been able to do, and this is on an hourly viewpoint, so let me go back up to a 4-hour, but it still has a decision to make because this is kind of a key area to the downside. And so if it visits down here, it has to decide, am I going to hold this Am I going to break and retest? Or am I just going to shoot right on through it? And back up to the upside, we've got an area of interest where essentially what we've been doing is we've been making lower highs. And we haven't made a lower low yet, because you see price kind of held the level where it held last Thursday. For all intents and purposes, kind of held the same level. So it has to decide, am I going to make another lower low, or am I going to chop around here and try to make a higher high this time? But we've got some soldiers in some areas of interest if we want to go short around here. If until this trend is broken, then we see, okay, this is where it was established. Come down, retest, come down, retest, come down, retest, come down. What's the next logical thing to do? Well, it's going to retest. If this doesn't hold, well, there's our next one that it might retest. Okay. So lots of times people try to make this harder than it is, and they kind of overthink it, if you will. But if one thing I learned from Mike, he said the market will tell you what it wants to do. You just have to understand what it did in the past. And that resonated with me back then and has stuck with me now. And that's why I use things like recency bias. Do I need to move a level based on what happened most recently? Or how did price react off of a certain level? Well, I've noted, hey, it's held here the last 3 days. Or, this level happened to drop down to that 2018 low. And, I'm a bright guy, but I can't remember all this stuff. So I'll just put notes on there.
Right. Tom, is it okay if I point out another trend opportunity and get your thoughts on the trend?
Yeah, sure.
Maybe if you zoom in on a 1 hour, probably I can pinpoint that exactly where I see. So on 312 to 315 window, on March 12th to March 15th window, there are two candles, there are two price actions where there's a sharp move to VIX. There you go. I think Thursday, if you move your mouse to the left, a little bit to the left, a little bit to the left. There you go. On top, there's a huge wick. No, a little more to the left. Not that.
This one?
Yeah, that one. And then if you connect to that to the next week on the Friday, between Friday and Sunday.
That
down,
one?
down,
Down, yeah.
Okay. Now the reason only I brought this is that on Monday when the market halted and came up, it didn't go past the trend line.
True.
And if you just zoom out a little bit, I thought that may be a confluence on the.
It's possible, and it's building like a little slice in here. Chances are price could come up here if it breaches this one, because it didn't respect it at all, not even momentarily on an hourly. It just kind of went right through it. So for me, if this had happened, me personally, I do that. I just take that off, because I don't want to use that. That's not to say you need to do that. Chances are price could come up here and kind of get stuck in here before it makes a decision. So yeah, absolutely. And that's when we talk about trading style, because this trend line is not incorrect, and it may be in your style and preference to use it as a potential soldier. But for me, to fit my style, I probably would have taken it off just because of the price action through it.
That's exactly the reason I want to validate to my thinking on whether it's a right trend or it's too ambitious.
Yeah, I think it might be a little ambitious, particularly given the VIX is at 72, which is an indication of potential volatility into the marketplace and the fear factor, if you will. So in the time that we have left, what I want to do is I want to move on to another clean chart, and I'm not going to spend as much time, but I'm going to spend that 5 to 7 minutes, and I want you guys to watch how I'm going to, mark it up from the highest time frame. And I'm going to let me know if you can see this screen. I've gone over to EU. Can you see this?
Nope, we don't see that.
I might have to stop share and reshare. How about now?
Yep.
So everybody's got the euro dollar.
Yep.
Okay, good. So I'm just going to go through You guys can certainly ask questions, but I want you to see what I see, and I'm just going to do the monthly first. So this is where I use my yellow. And some of these might not snap precisely because I'm trying to go a little quick. So lots of levels here for sure. And truth be told, the more recent it is, even though, yes, I do work from left to right, the more recent it is, the more important it is to me. I think that's good for that. Now I'm going to be working one segment above and one segment below. I'm just expanding my low. Let's see. So I'm at a weekly, and to be honest with you, I'm not going to go any lower than this because there's an area of interest that's jumped out immediately to me just based on the basic structure I put into place. So this trend established here, respected, kind of shot off of there. So I like that level. It's really strong. And same thing off of this. This one was held 1, 2, 3, 4, 5, 6, 7, 8 times. So this trend has been pretty sturdy. And we know that the first time that it tested this, it just skyrocketed off of there. Now this trend is of interest to me because it kind of closed it in. And even though it didn't respect it here, it came back down and went back up. What I'm going to look for is potentially is a long down in here, particularly if we can get below this monthly pivot point. And we know the last time that price touched this trend line, it absolutely leapt off of there. So we might get some price action that it's come down to here. If we can be lucky enough to get a retest here, maybe it's going to shoot back up to this segment right here. It may or may not. It could just come down here and totally disregard and say, you know what, I'm going down to here and then to here and then just keep going. But based on historical price information off of this level, you know, when it's held pretty good. You know, held, retest, jumped up. Look, jumped up, back down, retest, jumped up. Same thing. It's when it's held, it's done really well. And you never ever know as a trader, is it going to hold next time? But what we're doing is we're building an educated guess. And you know, we're getting a pretty good education in this course. And if we look at his history, that will give us an indication of what could possibly happen in the future. Now, that's just an area of interest for a long. For me on this chart, if I had any interest of a short, it's probably up here. Potentially, I could draw this as a trend. I'm certain on a daily basis that I can use, let me give you more than just a year. You know, that's now an identified level because it just absolutely broke off of there very hard. And I'm going to make that gray because I'm down on the day. And we see historically, you know, it wasn't a tremendous level, but it has held off that daily. It's held here. Didn't hold, but went back through it. Didn't hold, but closed below it. Went up, tested, broke through, came back up. So it's an okay level. This one right here. So for me, potentially long down here, potentially retest and short up here, and in the middle, you can theorize and say, oh, I got a level here, I got a level here, I got a trend there, and those wouldn't necessarily be wrong. But with all this chop through here, other than a binary, I have no interest trading in the middle right here. Any questions on that? I know that one was a lot quicker, but in a very short amount of time, just using basic structure, we now have two levels of interest, one to the downside and one to the upside. And as a trader, you always want to think bidirectional levels. So if you have a question or a comment, thoughts that you want to share, or anything before we finish, I'll give it a few minutes.
This is Vijay here, Tom. I have another question, if you don't mind.
Sure.
If you just zoom out a little bit, one more, and then move the chart to the left a little bit.
I have to give it more.
Sorry, move. Yeah, there you go. So the bullish pop came back at a confluence point where the two trend lines met on the February-March timeframe, and then this is a huge bull pop, right?
Yes.
And then if you see to the right of your screen where the price is 1.0852, there's a
This one?
yeah. Do you think it could be another opportunity to watch for? Is that a valid?
Yeah, absolutely. Let me give it some more space so I can kind of put it in the center.
There you go. Yeah.
Yeah, because price might not come back down here. It might respect this and bounce back up, but then yeah, absolutely, this could be a level because this is that really strong one. And oh, I didn't mean to put that in there.
And that has a support resistance as well.
Right. And so sometimes I'll do something like this, just so, because you know, you flip through chart, I'll make it thicker. So I know, oh, okay, that one was a stronger one than the others. That one's more important to me. So really what you're saying is the next time that price visits this, I probably have more of an interest than if it visits here or even this one, because this one was so strong.
Yeah.
So yeah, you could certainly, it could just trickle down to here and all of a sudden just boom, shoot off of there. Or, you know, it may never touch that trend line again. We have no way to know, but yeah, good catch.
And then there is a short opportunity at 1.1298 where the trend line and the price level interjects.
Yes, right here.
Okay, cool.
And I'll tell you, for me, these levels are more important than a trend. So if it comes around here, let's say price is right here, I'm not going to trade this trend line because to me the levels usually hold stronger than a trend. Make sense? So you know, let's say it just kind of goes sideways, comes up over here, or it's close. Let's say, you know, sometimes it gets close, and you say, oh, I don't know, which tool should I take? Should I take the trend or should I take the level? You know, in my case, I'm always going to take the level. You know, like around here. Okay, I'm going to take the level, not wait for the trend. but I'm trying to, like right here, I'm not going to take the trend. I'm going to take the level. Does that make sense, VJ?
Yep, absolutely. Thank you.
Yeah, good, sure. Anybody else? Okay, I think we got a question in chat. So you says Sergio asks, so you trade the most touch brackets instead of binaries? Not necessarily. Particularly this week, though, yes, touch brackets because of all the just the awesome movement. But if you've seen my posts before, you know that I do trade a lot of binaries. If I'm intraday trading, I like to trade binaries because I'll take a 2-hour binary, and I've got a system that I like to use where I can get a 2-to-1 reward to risk ratio. And so I've gotten pretty consistent with my binary trading like that. So it all kind of depends. You know, if we get a week or so, Sergio, and price just wants to touch this and drop, touch this and drop, touch this and drop. You know what I'm talking about. We've all seen those days or weeks where price will. It's kind of like a feeding trough. You know, it'll just touch this and drop, touch this and drop. When I start to see that pattern, I'm like, okay, binary and drop, binary and drop, binary and drop. And the people that are swing traders, they don't do anything there. Okay. But if you're a swing trader and you're a binary trader, then sure, you can take advantage of that. So next comment, John from New York. I'm tracking with you so far. Fascinating. Thank you, John. Appreciate that. Sergio says, okay. I don't know if you guys can all see the chat, so I'm just kind of reading it. And I think that, oh, 2 new messages. Great session. Thank you, VJ. Says, am I trading Nadex only, or are you trading with Tasty, Toss? I use Tradeovate for my futures trading. I've been using Nadex touch brackets because I can definitively manage my risk. I don't want to wake up tomorrow and get a margin call because my stop didn't get filled, but I do trade on Tradeovate as well if I'm holding longer term. And I have a spot Forex account that I use on, it's called IG. IG.us. I think they're relatively new. Someone had actually posted that I was using Oanda, but I like the interface of IG better. Someone posted that in the BTG room not too long ago, and I think it was around the holidays, and I took a look at it and I liked their interface, and so I'm using that. And I've got a couple of open swing trades on it right now on Forex. All right. Oh, you're welcome. All right, we'll give it 2 more minutes to see if there's any other questions before we sign off for the evening. Or we're waiting to see if there's any questions. I've been going through the assignments. Everybody's been doing a pretty good job. If you get an assignment that gets rejected, don't take it personal. Don't feel bad. There's been plenty of assignments that were rejected. Was this the first seminar, John? Yes, it is. This is the first seminar under the new format of the Price Action Mastery course. So this will be recorded. It'll be part of the lesson material. It probably won't be up there till tomorrow. It takes a while to convert these and then upload it and all that kind of good stuff. Well, good. The last piece of information that I'll share with everybody, I think most of you know that I've taken, some extra training with Mike. I've taken some of his boot camps. We spent probably 3 months on basic structure and trend, support, resistance, and trend segmentation. 3 months, and just worked all of our charts, all the time frames. The reason I'm sharing this with you is because it amazed me that these levels that you identified the monthly, how they'll come back to be of significance sometime down the road, and the weeklies. If you guys saw my YM post from last week, again, I did it on the monthly, and it held and worked out. I'm working a plan on NQ right now on the weekly. Probably some of those levels that around what we saw this evening, and of course I'm using some additional tools as well. But we spent 3 months just on basic structure, and for our assignments, and we could do it in demo or live. we had to identify, just like we did tonight, and identified bidirectional areas of interest to go short and to go long. And we had to trade, and that was our assignment. So we had to submit our plan. We had to trade either demo or live, and then we had to submit the results. And if you can trade just support, resistance, and trend, and throw in some market segmentation, then when you throw in the other tools, I don't want to say it becomes easy, but that's how you can build confidence, because if you can successfully trade with confidence with support, resistance, and trend, and then you layer in some of the other tools that you've either been exposed to, or for the new students that you're going to learn, like Fibonacci, supply and demand, change control, then it just builds up that much more confidence, because you'll have your basic structure as your support. And if you've ever seen any of my charts, usually in a tradable area, you will probably have one support and resistance line, possibly two, and that's it. And that's why his charts look so clean. I've tried to model my charts off of that. So when you see my post and they look kind of clean, well, I've taken off all the clutter. Okay. But, and I've taken off my notes where I said, hey, this one held for 3 days. And, so those are clues that I give to myself. So I see no other questions in here. I appreciate everyone being here tonight. Keep working through the course. And we'll have our next session like this. I'll get it scheduled. You'll see an email, you'll see it posted, and we'll just kind of keep moving through. But in the meantime, I want you to practice, even if it's charts you don't trade, practice them. I'll put a template out there for the chart library, and then begin to fill out your chart library. All right. Thanks, everybody. Good night.